Hi, this is Zach Meir from Zach's Traders Cafe with a look at some bulletin board hero stocks on Thursday, the 23rd of June. Starting off with Bacanora Minerals and some progress here after the gap through the 200-day moving average in April and the rebound off the 50-day moving average at 85 earlier this month or in the last week. Just clearing the 20-day moving average at the moment and decent close above that at 94, which we're effectively getting now, should lead up to the top of this rising trend channel from March at 110 pence. This stage only an end of day close back below the 50-day line, really delaying the upside argument. RSI at 57, so a leading indicator on a new leg to the upside, especially after this little rebound above the neutral 50 level. Chariot Oil and Gas is next, and here you can see that there's been a rebound, I suppose just bear trap rebound from below that former March support, all of this above the 5 pence level, and while we hold above 5 pence, we're looking for a target towards the main post-May resistance at 8.5 pence, which is roughly where the 50-day moving average is now. The overall view, though, is that if we can hold above 5 pence, we should be able to retest April resistance over the next couple of months at 11 pence plus. Capex, former hero of last year, let's say, coming back after the dive in February when we got the recovery of the 50-day moving average, and the shares haven't really looked back since the 50-day line now at 4.5 pence, and while there's no breakback below that level, we're looking for the top of this rising trend channel from December at 7 pence as a 1 to 2 months target. You'll also see that over the past month or so, we've had support coming in at the 200-day moving average as well. RSI at 57, bouncing off neutral 50, is a leading indicator on further upside. With all the other final feature to notice the way that yesterday the shares gapped up through the 20-day moving average. We might see a partial fill of that gap, but above 4.5 pence, this looks solid. Deckel Oil is next, and despite multiple fund manager buying here, stake building, shares not that keen to get off the ground. We've still, at least we do have a rising trend channel which you can draw in from as long ago as October last year. Good bounce off the 200-day moving average in the last week at 12.09 pence, and really while above 12 pence and above the floor of this channel, we're looking for an eventual target here as high as 18 pence over the next 2 to 3 months. If you're cautious on the stock, you'd wait for an end of day close above the 50-day moving average at 13.69 pence. Northcote Energy stock always in focus with private investors. The key charting situation or key charting feature to look out for at the moment is whether we can get a bear trap rebound from below that former January floor, that low there at 0.033 pence, and a decent weekly close above that, and the 50-day moving average just around current levels should be enough to at least take the shares up to the main resistance area here, which is 0.07 pence, just below the 200-day moving average, as a 2 to 3 months target. But obviously this has been a fiddly situation, and you have to be particularly cautious given how small the share price is here, just fractions of a penny. On to Oilex, and this looks like it's in a constructive phase as well. Higher lows for the second part of June above 0.4 pence. We had that little gap earlier this month as well, and a gap fill rebound, which is a decent buy signal, even though it doesn't seem to be making much effect or providing much effect on the chart so far. Broadening triangle here from January, and above 0.4 pence, the eventual target here, 1.2 pence on a 2 to 3 months view. Perhaps if you're cautious on the stock, you wait for a clearance of the 200-day moving average at 0.77 pence, just because we have had quite a volatile ride here over the recent past. On to Petrol Resources. Rising trend channel here, really in place since March, bounced off the floor of the channel just around the 5 pence level, and former May resistance as well around that number. Target here over the next 2 to 4 weeks up to 8 pence. Finishing off with Tiziana Life Sciences, decent support here in recent weeks at and just below the 50-day moving average at 142. Above that, we're looking for a 180 target, which is the top of the February rising trend channel. Overall recovery here is supported by an extended RSI uptrend line running through 50, off which we've just bounced in the past week. The other final point to note is the gap through the 50-day moving average, which tends to be a decent positive charting signal. That's it from me. More updates at the same time tomorrow.